Hey everybody, Cowboy here. Today we discuss low volatility markets and the problems they can cause in short-term trades. Some really good data here to do with the spread and a few very basic technical items. If you stick around after this quick clip, you'll be able to see who we are, what we do, how to find us, or simply go to the website at the bottom of the screen or zap the QR code right below that. Enjoy the show. This is what we're talking about with low volatility. Okay, so as a trader, what we have is, again, a concern with the spread. And the spread, if I were to expand this screen and really stretch it out, you're going to see it. And you're going to see it with this red and this blue line. So I'm really zooming in here. So far, you can't even see the chart, right? Another way to do this is to go on a lower time frame. But it doesn't matter. Either way you see it, you can also see the spread in numbers right here. This 1.5. That 1.5 right there, that's 1.5 pips. And you can just look up pips, forex pips, if you want to know what that is. But it's basically a unit of measurement in forex. It's the primary unit of measurement in forex pairs is a pip. We measure forex in pips because back before we had auto calculators, we used to actually have to design our lot size, which is the size of our trade, in terms of pips. So how many dollars per pips do you want to earn in a trade? And then it's just an old calculation that a lot of people still use, especially if you're trading over on MetaTrader, right? So you're going to need to know pips if you trade Forex. And this is about a 1.5 pip spread. So I'm going to just kind of snapshot this, but graphically snapshot it. You have a red, blue, and a gray line, okay? And we're going to code these properly. This will be gray, right? This will be red. And then this will just keep blue like it is. I just want to do something here. There. Okay, so, and then I'm going to go ahead and move these away from price so that we don't get confused here. And we're just simulating the spread right now, okay? Now, to keep this super simple, this right here is where money gets lost because the blue line is where the buyers are willing to buy, and the red line is where the sellers are willing to sell. So if let's just say you do what's called a market order, and you buy, and you want price to go up, right? Well, you're going to be out money right away, because the official price is where this gray line is, but you bought up high. And if you wanted to sell, your sell price is much lower. So if you bought here, right, instantly, the best price that you can get if you wanted to sell out of the trade is way down here. And essentially you're buying high and you're selling low. And that's just part of Forex and trading anything. Doesn't matter, stocks, everything's going to have a certain spread. I mean, once you get into like certain like indexes and really high volume stocks, then the spread kind of doesn't matter. And the higher your time frame, the less the spread matters. And we'll explain why that is. Like if you're doing like a swing trade, then you almost don't care about the spread because everything is so zoomed out, it doesn't matter. But if you're a day trader, right? Or if you're in a low volatility market, the market's only going to move so much, right? So the spread's a pip and a half. So if you are counting on the market moving 5 pips and you're going to make, let's just say, $50 per pip, right? So let's say you think the market's going to move from here to there. That's where you think the market's going to go. That's 5 pips. The spread in reality is going to be something like this. 31. Yeah, so that's probably like what the spread really looks like. Okay. So, and you're betting on the market going up, right? And you bought up here and you can only sell a pip and a half below. Well, to keep this really simple without getting too technical on this, the spread is 1.5 pips on average during high volatility time. Your trade is 5 pip increase. You're making $50 a pip, which is a pretty large trade. I believe that is a 5 lots. It's pretty big. That's a large trade. So, for most people anyway. Okay, here's the problem with that. You need to have a 5 pip increase to make your full 250, right? But you got to subtract the spread from that. So you're going to have a 5, and that's if you win, by the way. You have a 5 pip increase minus 1.5 pips. So automatically, right away, you're losing 30% of your profit to the spread. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.